Hey guys, it's Canadian Kyle here at the Wealth Holders Podcast, and today I'm joined with Allan Barry Laboucan. Hopefully, I pronounced
Laboucan.
that right. Thank you.
Laboucan.
Laboucan, thank you. And he is the founder of Rocks and Stocks News. The link will be in the description below. But I invited Allan on because I noticed he was interviewing some of the guests I had on my program. So I thought, I want to talk to this guy. So, Allan, thanks for coming on the podcast.
Oh, it's my pleasure. Thank you for having me.
Now, as a first-time guest, I always start off with the same question. I want to know, what were you doing when you were my age? I'm 26, so what were you doing from 20 to 26 years old?
I actually was in the golf business, if you can believe that. I used to play a lot of golf, and I was actually a professional teacher. And then I got into business through marketing. And a guy that worked for me in the mornings or after the market had opened, he came to me one day and he said, "Al," and I was his manager, and he said that he had things going really well with his mining stuff, so he had to quit. And then a couple months later, he gave me a call and he said, "Allan, we need good people that are able to tell a story, and why don't you come join us?" And not long after I was your age, I started in the mining business, and it's been nearly 30 years since then.
Wow, that's pretty cool. And I want to dive into that a little more because I did read your bio on Rocks and Stocks, and you said you were consulting these exploration companies back in '93. So I'm wondering, what were you exactly consulting them on?
A lot of companies are very good at the technical side of the story. They're not so good at at how to communicate that to investors. So I worked for a large geological services company. At one time, it was the largest in Vancouver, and they had lots of great geologists, but they didn't really know how to tell their stories very well. And they had two public companies, and I did the investor relations for them. So I helped them write their news releases, get their corporate presentations together, all of that sort of stuff. And I really had a love for learning, and fortunately I was mentored by some of the top geological minds in the world, and they helped me to be able to understand the technical side of it so that I could then go and communicate that to the public. So I've had some fantastic mentors in geology that have helped me to be able to present a story on a junior mining company. And around 2005, I started my own research report called the Allan Barry Reports. And then I started getting on BNN quite regularly, because one of the hosts there, he was someone I knew. He had a show called Investor Online, and it was on Saturdays. And he would bring guests on that were in the mining business, and then afterwards he'd have a chat site. So we would go on there and we'd chat. Viewers would chat with the guests, and Pat Boland, who was also the host at BNN. And so when I started my reports, I phoned him up and said, "Pat, would you like to receive my reports? There's no charge." Mm-hmm. And he said, "Of course I would." And then about a year later, his production people called me and asked me if I wanted to come on TV to talk about these companies. And so I did that intermittently for about 6 or 7 years. And then BNN stopped covering the junior mining space. And that's when I transitioned to doing my own shows on YouTube. And I really felt that there was and still is, not enough brokerage and media coverage of the sector. And, the sector needs a lot of good commentary. And, you know, with my experience, I've been doing that since 2005. And, you know, I'm glad to appear on shows like yours because, you know, you're doing something that I think this industry needs, which is people to talk to these companies and help get their stories out.
I believe so because there's so many of these companies, and I might try and research one, and I'm like, there's not a single video on these people, but I've based on people saying, hey, you should look at this company, and I look, I'm like, hey, I'm pretty impressed, but not a single video. And with YouTube these days, you'd think times would change. Are we just kind of lagging in this space?
I just think that there's not a lot of good commentators that are putting out this kind of content. And it also goes to the brokerage houses, you know, over the last 5, 10 years, they've kind of moved from weed deals to bit crypto
Yeah.
stories, and they've kind of left the mining exploration sector behind. And, you know, it goes back to what I said earlier about a lot of these companies are good at, you know, putting holes in the ground and talking about geology, but they're not great at, you know, communicating those stories. So, you know, it needs people like you and me to be able to ask them the questions to pull out the stories so that investors can understand it. And, you know, that's why I do what I do. And I encourage people like yourself to do the same.
No, that's great, Alan. And I want to learn a little bit more about you as an investor, or as a speculator. Like, are you full on speculator, 100% in the exploration companies, or do you have investments in majors? Like, what does Alan's portfolio look like?
I mostly stick to the exploration stories because I think that those are the most inefficient of the markets.
Right.
But I will, you know, go back down into the to the producers as well when they're smaller producers or when they're on the verge of becoming producers. There's a famous analysis done by Pierre Lassonde, and Pierre is one of the smartest people in the mining business. He ran Franco-Nevada, which was one of the best performing gold stocks in the 1990s when gold was much cheaper. It's a royalty company. Then that got bought out by Newmont. He became the CEO of Newmont. He's
Mm-hmm.
also been the president, I believe, of the Gold Council. Very smart guy. And he came out with this analysis a number of years ago called the Lassonde curve. And there was two key points in the Lassonde curve. The first one was making a discovery. You would see a big growth in their valuations. But then it would go through a lull while they were developing the project.
Mm-hmm.
And then it would have another run. And so a new company, when I can look at them at the bottom of it's called the development discount window.
Mm-hmm.
When I can look at them at the bottom of the development discount window, I will look at those as well. So there's a couple companies that I follow in that size, but the vast majority of companies I follow are in the exploration end of things because I think that they're the most underloved, undercovered, underreported on, underpriced, mispriced
Mm-hmm.
group of the whole mining sector.
And you mentioned Pierre Lassonde and Franco, and actually my portfolio, the lion's share is royalty companies and prospect generators. Are you fond of either of those two business models?
Well, when it comes to the one that are run like Pierre Lassonde does, I pay attention. Not really, because I'm kind of a swing for the fences kind of guy. I've been in exploration for so long that I kind of know which pitches are the best ones to swing at. So in a way, I kind of run my own prospect generator, which is the buy list or the list of companies that I call my shopping list. I can sort of look at them and see, well, they're doing all the work, and I can come in at opportune times to feature them in my reports or buy them as an investor. And so I don't really, but I think that it's a very viable part of the sector for those that don't have my kind of background.
Mhm.
You know, having been in exploration since 1993, I think that, you know, I'm a good filter, that I don't really need a prospect generator or a royalty company to do that research for me. I do my own research, but if someone can't do that kind of research, you know, they're a very viable investment for those kind of people.
Yeah. So should people just, new people to the space, should they just avoid the exploration space period, even if they are a geologist or have a technical background? Because there's the
I don't,
stock aspect of everything too.
yeah, I don't really think so. I think that, especially if you're young like yourself, you're allowed to make a lot of mistakes when you're young. And that's how you build up an education. And, you know, that will help you to have some fabulous returns. But probably a good mix would be 50 or more percent of your portfolio dedicated to resource money, could go into something like a prospect generator or a royalty company. I'd probably lean more to royalty companies, because there's, in a prospect generator, there's still a fair amount of exploration that has to be done.
Mhm.
So for me, I would rather go out and pick my own exploration companies and projects to invest in. Um, but royalty companies are a different breed. You know,
Mhm.
they get royalties in producing assets, and they don't have a lot of high, you know, operating costs. So, you know, it's kind of like Warren Buffett. You know, Warren Buffett, I think he has at Berkshire Hathaway only a half a dozen to a dozen employees,
Yeah.
because it's mainly an investment fund, and that's what, you know, royalty companies can be for you.
Thank you for that, Alan. And where you like to speculate, a lot of these companies could be very short cash. Like they might have a great deposit, but they have no cash. And you see that share dilution is coming. Is there ever a good time to invest in a in the publicly traded shares before financing, or should you always wait till after?
Well, you know, not to be weasel out of it too much, you know, it all depends. Um, I get involved in projects prior to discovery. I get in projects after discovery. A lot of times when you can find a really good exploration hit, those companies will quickly get financed and usually at a much higher valuation. But, you know, because of my experience, I can also find good stories pre, before uh, drilling success. One of my recent sponsors is a company called True Precious Metals, TRU.
Had them on.
And I looked at where they were located. I looked at the geological story. I looked at the previous work. I talked to their geologist and their CEO in an interview. And I said to myself, well, you know, this is the perfect kind of company that I looked for. They don't have much stock out. They have good projects. They got a cheap valuation. They got money in the bank. And those are the hallmarks of what you want to look for. And so I invited them to be a sponsor. And fortunately, not long after they became a sponsor, they drilled into one of the targets that I thought was one of their best targets,
Mhm.
and they hit visible gold. So, you know, it, like I said, it all depends, um, where you want to swing at the pitch.
Okay, that's a great segment for my next question because I had Joel on, the CEO of True Precious Metals, actually, and they always say you got to look for the people. And I want to get your take on this because what if it's a rookie CEO? He's not a CEO of a company, but he surrounds himself with the right people. It sounds like you're willing to take a bet on that individual.
Absolutely. And, you know, I kind of I'm kind of in a different camp. I've heard that a lot, but, go after guys that have already had success.
Mhm.
But the problem with that is that those guys, they tend to be able to market their projects and companies and fund them at higher prices. So if I come in there, there's a chance for a 50% haircut or more, simply because they got a high valuation. What if they don't have success immediately? Their prices can get clipped quite quickly. And you're paying a premium. And the other big thing that I find is that, when these guys running juniors are starting out or haven't made a success yet, they're still drinking $10 a bottle of wine. When they start drinking $300 a bottle of wine after a big success or more, they're not quite as driven as the young CEO or someone who has something to prove. And I'm not a people first person. I'm a geology and drill hole first person. It's called the truth machine, the drill rig, for a reason in this business. And that's first and foremost what I look at. It just so happens that a lot of times when they have success with the truth machine, they also have good people involved that help them get there. In the case of True, which you've interviewed, Joel, Barry Green is a very sharp guy. It didn't take me very long talking to him to recognize that he knew what he was doing, and that under his guidance with the drill rig, that they'd likely have success. And I think they're at the early stages of their success. So
No, for sure.
yeah, I'll look at, I'd caution people against going after those that have had a lot of winners in the past. You're usually going to pay a premium for them. And sometimes that premium's not really worth it. And they're not really as motivated as they were when they were broke.
No, for sure. I appreciate that. And like you say, you're a fundamental guy, and the truth machine is the drill rig. But to an extent, how much emphasis do you put on marketing? Because there might be a company, all money goes in the ground, none goes to marketing. And if a tree, what's that saying? If a tree falls in the bush and no one's around, does it make a sound? Like, some people are a little chintzy on the marketing. I think you need to put some toward it.
Most definitely. But, I'm also on the marketing side of things, in that, I have a model from my website where I don't just talk about companies that are sponsors of my website. Most of them were first picks of mine in my reports that I then invited to become sponsors of my website.
Right.
So obviously, I think that marketing is important, but being able to recognize where that marketing dollar is spent is important as well, because you could spend a lot of money in marketing and not get anywhere. And a way for companies to do that is YouTube, for example, has a lot of good analytical tools. And I pay attention to those analytical tools. For example, the average viewer of my interviews watches approximately 35% of the video. And I do long form videos. So I talk to people for 30 to an hour. Mm-hmm. And 30% of that gets viewed. Now, I may not have a huge audience of viewers compared to others, but if you look at those statistics, you'll notice that those with, let's say, 3,000 to 5,000 viewers on a show, which mine are usually in around 300, a lot of those will have very low viewer times because they're buying the eyeballs and they click and then bounce. They leave right away. Whereas, say, 300 people watch my video, one of my interviews or my in the news shows, a third of that will get watched. So to put that into context, say you go to a company goes to a mining conference to speak with investors. You might talk to 20 really serious people during that entire conference. For that, it costs $10,000 to $20,000. The executive has to be out of their office for days, a week or so. By the time they get back, they're tired, and it takes them a few days to get back in the saddle, if you will, and it costs them a lot of money. Whereas my interviews, my sponsorships, you can go to 2 or 3 conferences for the less than what it costs you to sponsor my website. And for that, those 300 people you get to talk to for about 20, 25 minutes. So if you went to a conference and talked to 10, 20, 30 people for 20 minutes or so, that would be a good conference. In my case, you get to talk to about 300 people for the same amount of time at a fraction of the cost. So it comes down to, well, how effective is the website at what you call engagement, so that they're not just coming on and leaving right away, that you're able to capture their interest and keep them there, is more important to me. So where and how you spend your money on marketing is important, but that's not a, not a big thing for me, because a lot of times I'm providing that marketing for companies that I don't even charge for it. I never invite them to be a sponsor. I have a handful of sponsors, and they help me to be able to produce my content, and I don't have to ask everybody to be a sponsor.
No, that's great.
So I often will be one of the people that goes out there and helps them to get their story out there. So it all comes back to the truth machine. That's my biggest thing. What is the drilling telling me, and what is the potential to drill into something telling me? And that's the biggest thing for me.
No, that's great. Thanks for the explanation. And I just want to touch on it too, because I have 500, a little above subscribers, and I get 100 to 300 views on average, but they stick around, they watch the video, and they're serious. Like, if you are using YouTube as a research tool, you're coming on to hear these people talk for an hour. You want to hear them. You don't want to hear them for 6-minute skits saying the questions ahead of time.
The corporate presentation. I'd rather have a conversation like you and me are having right now than, that's more human than standing up there and hearing a corporate presentation and nobody asking you any questions. So, that's the goal, is to, if you can talk to 100 to 300 people for 20 to 30 minutes, they're interested investors. And so it's a qualified audience, and they're engaged. That's why they're watching it. So to me, that's much more attractive to sponsor something like that, or to appear on something like that, than going to a mining conference where, I might get someone's attention for a few minutes, and they're looking all over the place at all the people, and whereas I can speak to someone for 20, 30 minutes on a video, and they can see my authenticity, then I think that that's much more powerful.
Yeah, because in this day and age with social media and stuff, people attention span so small. So if they can commit 20 minutes, you're like, they're serious for sure.
That's in the world of doing video. That's amazing engagement. People in the mining sector don't understand that to a large degree. How impressive being able to keep someone's attention on a video in this day and age for 20 to 30 minutes.
Very
to be able to present your company to a qualified investor for that long it's remarkable. It doesn't sound like 50,000 views like some cat videos get, but you know, those aren't investors watching those cat videos.
Mhm.
These are qualified people that are coming in the door to hit play and watch what you got to say.
No, for sure, Alan. So you're talking about the truth machine being the drill rig, and I'm going to paraphrase Rick Rule here because I don't remember exactly what he says. But when he's looking at the speculative exploration, he's saying it's either a hit or a miss, home run. Might as well go big, go with the tier one deposits. So you're not in the same camp as that, are you?
Well, how do I know it's a tier one until I see drill results?
Right.
And really, I'm looking for inefficiencies in valuation. So, if it fits into a criteria of a tier one or tier two, if I can buy that at a deep discount, that's what I'm interested in. Like, for example, there's a copper company I follow, and maybe they're not as big as some copper companies out there, like an Ivanhoe or someone like that,
Sure.
right? But they've got 9 billion pounds of copper in the ground. They're trading at a fraction of a penny uh, for that copper in the ground. Generally speaking, in a takeover over the last 20 years, with a company that has a PEA in copper, they get taken out for 1 to 3 cents a pound.
Right.
So in this case, I'm able to buy it for like a third of a cent. It's a big project, and they do have a PEA, and they're enhancing that PEA. So I can buy, maybe it's not considered a tier one copper project, but I can buy it at a fraction of a penny. And when copper goes over $5 a pound, which I think it will in the next 6 months to a year, and they deliver a new preliminary economic assessment that brings down their capital expenditures and brings down their operating expenditures and shows that this is a very attractive mine, they will likely get bought out for 3 cents. So that's a potential 10x, 5 to 10x. That's what I'm interested in looking for. Whether someone calls it a tier one asset or not, I really don't care. I'm
Right.
more interested in finding something that is undervalued and underloved,
Okay, for
and a
sure.
path to get a better valuation.
No, of course, of course. And you're talking 5 to 10x return. So that's always a hard thing for me as a novice or newer investor or speculator is how do you tranche out of a position? Because yeah, you can make 10x if you hold it for that length of time. So what is your selling looking like when you're holding these exploration companies?
Well, I could use that same company again. By the way, they're called Tendente and their symbol's DNT. I can, if I still think that there's meat left on the bone, and that the price of the copper is going up like I think it will, as long as those two things are in line, and I don't have something else that I think is better. Like I want exposure to copper, and the problem is finding good copper stories. So if I can't find something to replace it with, and I think there's meat on the bone and the copper price is going higher, I'm not a seller. Now, say that same company, I think there's meat on the bone and it looks like the price of copper is rolling over,
Mm-hmm.
then I'm probably a complete seller. So, again, it depends. But by a general rule of thumb, if you make multiples on your money and you haven't got this nuanced way to evaluate things, and you've made multiples on your money and you don't take some money off the table, you're in the wrong business.
Mm-hmm.
Go to a casino and roll the dice at the casino, because that's what you're doing. You're gambling, right?
Yeah.
If you're willing to, if you made 2 or 3 or 4x on your money, and you can't do that nuanced evaluation of the future, and you don't take some off the table, you need your head examined.
Yeah, no, I agree. So you're mentioning copper, and most people in this space agree with the fundamentals of copper that there's still some legs left in this copper bull cycle. I'm wondering, is there any other commodities you're interested in right now? And maybe get your thoughts on gold at 1800 or wherever it's
Yeah,
at today.
actually, it's fresh on my mind because I just did a show before we came online here. And first of all, if you take a look at the monthly chart of gold that goes back 50 years, you'll see in the late 80s or the late 70s, it made a high around $800 an ounce. And then it went down and spent a lot of time at the bottom. Then in 2001, it started going up dramatically and it created a cup formation. Okay. And then it rolled over again and it made another cup formation, which were laid in the stages of the bottom and starting to go up the right side of the cup. And it's very interesting technical charts for me because one of the most bullish indicator charts is a cup and handle formation. And if you look at gold on a weekly or a monthly or a daily, you'll see the repetition of small cups, almost like a fractal. You know, they just keep repeating themselves. But then if you take a longer term window, let's say 50-year window, you'll see the big trend from late 70s to 2001. Then you'll see another one has been happening currently. And I believe that the fundamentals for gold and silver are very strong, maybe even stronger than they were in 2001 when the right side of that big cup formation happened. The reason that I say that is you look at supply. There's a reason why majors are buying other big companies. It's because they're not having any success with exploration or new mine development. So they have to keep their pipeline full. So they go out and buy another mining company. But that doesn't really do anything to the supply chain. There's still not enough new discoveries and new mines in development. So supply is tight. And the actions of the majors to go out and buy other companies tells you that supply is tight. On the demand side, you've got a bunch of drivers of demand, such as you've got the US dollar printing. In the last year, 40% of the dollars ever printed in the history of the United States have been printed. You look at the debt situation, the debt to GDP is currently at close to 150% of debt to GDP economic growth. You look at inflation. Now inflation is starting to kick in a big way. You've got supply chains affected by COVID. You've got people not feeling that they're getting paid enough. And this is bottlenecked the supply chain. And so you've got drivers of inflation on that front. And the Federal Reserve is really painted into a corner with so much debt out there. If they were to raise the interest rates just back to the average over the last 80 years, if they were to raise it back up to, let's say, 4 or 5%, they would completely decimate the economy. It would send the whole world into an economic depression.
Yeah, they
They're
can't
not
do
going
it.
to do that. So they're painted into a corner that they cannot fight inflation. So in that kind of an environment, with supply and demand being bullish, with the printing of money being bullish for gold and silver, with the debt situation being bullish for gold and silver, and the inflation, I think gold's headed a lot higher. And then if you go back to that technical charts that I talked about, from peak to peak from 1980 to 2001, it moved from a couple $100 an ounce or $800 an ounce to $1,900 an ounce. So that's a 200% gain.
Mhm.
But if you roll it back to around 2000, when everything seemed to be conspiring like it is now for gold to go higher, it came from about 200 and change, and the right side of that cup took it up to 1900. So that's a 6 to 7x. So if you then look at this new cup and handle, let's say the bottom was at about 1100, and you put either that 2x multiple on it from peak in 80 to peak in 2001, or you put a more bullish 5 to 7x on it, that means gold is going anywhere from 3,500 an ounce to as much as, $6,000, $7,000, $8,000 an ounce. So whichever one happens, or even only if a fraction of the first one happens, these gold companies will see much higher valuations. And again, that trend is what I'm most interested in. But if you really want to get crazy and look at history, and history doesn't always repeat itself, but it often rhymes, you could get some pretty wild numbers out there for what can happen to gold and silver. So yeah, I'm tremendously bullish on gold and silver, and I have a bunch of great companies that I follow regularly.
Thanks for that, Alan. And I hear some talking heads talking about platinum being undervalued right now. Have you looked at the platinum market or covered any of those stocks? Care to share?
I don't cover it as closely as I used to. Relative to the price of gold, it is cheap. Why it's getting cheap kind of is contrary to my bullishness on copper and lithium,
Hmm.
because they provide a product that's important for internal combustion engines, gas. And
Mhm.
I think we're moving away from that, and we're moving into a, copper and lithium and batteries world. And so I'm much more interested in investing in the future than I am in the past. And I think platinum to a degree is in the past. And I'm much more interested in the future technologies, copper, nickel, cobalt, lithium, fueling the revolution in transportation.
For sure. For sure. I have one more question before we get into the vault. Let's say all your check boxes are met for a company, like right management, backed by a major, whatever it may be, cash, the geology's good, everything's what you like to see. There's a thin line between diversification and diversification, right? So what camp are you in? Like how many stocks should someone own based on their portfolio size, or where do you lie?
I'm much more in the hunt with the rifle camp than hunt with the shotgun camp. And recently I did an interview with Rob McEwen from McEwen Mining. And I asked him that same question. And he said, yeah, not only do I like to hunt with the rifle like you, Alan, I like to hunt them when they're not moving. So he likes to hunt them when they're really, really cheap.
Mhm.
And so I'm very much against diversification. I think that yes, you can protect some of your downside, but you also give away a lot of your upside. And if you do your research, there's an interesting book written by Peter Lynch. It's called Beating the Street.
Mhm.
And he talks about in there this the miracle of St. Agnes. There was this school, a private school called St. Agnes, and some guys on Wall Street wanted to test themselves against these kids. So these kids went out and bought a group of companies, not a lot of companies, but companies they understood, like McDonald's and and things like that, Coca-Cola, things
Mhm.
that they found out were publicly traded, and they just picked those companies and not very diversified. And then you took the professionals on Wall Street who are very diversified. They have tons of companies. Guess who won that contest? The kids, the grade six kids hammered the professionals. And that's because the professionals have 80% of the funds out there don't beat the averages. So to my mind, if you were going to buy the big cap stocks, you should just buy an index fund, because the professionals are pretty horrible at their job. If a group of grade six kids can hammer them by sticking to things that they understand, that tells you that the average investor can do very well, but it requires something. It requires you doing your homework. I always close my show by saying, my shows are for information purposes only. It's important for you to speak with your financial advisors, not just your broker, your advisors, your family, your friends. Discuss your thesis with them and do your homework. And the most important point is to do your homework. But talking to your friends and family is important too, because it makes you have to understand the story so that you can tell people what's going on, why you like it, and then get questions. It's amazing what kind of questions you'll get out of that process. But the big one is do your homework. Understand the companies that you are invested in, because if you understand the companies you're invested in, you're more likely to make intelligent investment decisions. And people who make intelligent investment decisions will do much better than, giving your money to someone who really doesn't care about your money as much as you do. And that's the professionals. The professionals out there, they don't care as much about your money as Kyle cares about his money.
No, that's for damn sure. No, I appreciate that, Allan. Thank you. I'm going to respect your time, though. We do have one more segment. It's called The Vault. And in The Vault, it's just 3 mentorship-like questions. You just dropped some mentorship there, and I really appreciate it. But let's get into The Vault.
Okay, so sounds good.
First question. What did your parents teach you at a young age that has stuck with you to today?
Well, I don't know if a lot of people are gonna appreciate this as much as I do, but my mom trained racehorses when I was a kid, and I was kind of a math whiz when I was a kid. And 2 things happened to me when I was a kid that really affected my entire future. One was when I opened the racing form, which has all these statistics. It was full of numbers, and I was like in my element. And the other was back in the day, the Vancouver Stock Exchange used to have a trading floor, and you could go, and our school, our elementary school, went to that trading floor, and I saw all these numbers all over the place, people all excited, throwing slips around. And my mom, because she was in the racing industry and she saw how much I was always coming out with a formula. Well, Mom, if you average out their past performance and you look at their competitiveness and you look at the times that they ran, you could come up with a formula. So from the time when I was 10 years old, I understood almost every statistic in a daily racing form, and most adults couldn't say that. And that's when I would start showing my mom my formulas for how to handicap the horses. So some would have discouraged it. My mom encouraged it because she knew I was happy with numbers.
Wow, that's an awesome story.
And it helps me to this day because, how you make your bets is really important in investing. And so I've been betting on things since I was very young.
No, for sure. I appreciate that. And second question. We are the Wealth Holders podcast. So can you name a high net worth individual or wealth holder? And if you don't want to disclose their name, that's perfectly fine. but what did he or she teach you, either in business or in life?
Well, that's a great question. And I mentioned one earlier, which is Pierre Lassonde, the guy who ran Franco-Nevada and really invented the royalty model. Another one that I was very fortunate to spend a lot of time with is a guy named Andre Gaumond.
Oh, yeah.
Andre is a geologist, and he found the Eleanor discovery for his company, Virginia. They were bought out. Then he spun out all of their other exploration projects to shareholders. That company was bought out. Then they spun out all the leftover exploration projects. That company was bought out. And Andre is he's one of those teacher kind of people. And we hit it off because I was always out there promoting his company in my reports. And they were very good picks. So I'm very happy I did that. But then I also had the opportunity to spend time with Andre. And he's been a phenomenal mentor. And one time I asked him, Andre, you've spent your whole career in the James Bay lowlands of Quebec. Why? And he says, well, it's an area that's endowed with great geology and it's underexplored. And when I first came to it, I knew that I could spend the rest of my career there. And he said that's why he spent all of his career there. That was one thing that stood out to me. And the other thing that stood out to me and has been really important for me now I'm a CEO of a public company, including being a researcher and reporter on the industry. I'm the CEO of Advanced Gold. And he said to me one time, he said, if you treat your shareholders well, they'll always stick with you. Do the best job you can, and they'll always stick with you. And that harkens back to something that my mom taught me about horses. There's a saying in horse racing, take good care of your horses and they'll take good care of you. So there's an alignment there between my mom and the horse racing and Andre Gaumond, who has been a serial entrepreneur in the mining business. And I've been very fortunate to spend time with him and learn from him.
Oh, thanks for sharing that. I appreciate that. And we talked a lot of subjects here. So I'm wondering how you're going to take this. I'm just a 26-year-old starting his journey in life. Any advice for the young listeners out there?
Do your homework. Research the companies, pick up the phone, call those companies, send them emails, go to their websites, read their news releases. If there's one thing you want to be a connoisseur of in this business, it's news releases. You can learn a lot about a company from how they write their news releases. I can look at a company and I can tell if the geologist wrote that news release and he's the kind of geologist who just wants to impress his other geologist friends. Okay? Because I've read thousands of news releases. A good structured news release to me there's three key areas that you'll look at in a news release. The headline, okay? What are they saying in the headline? The first paragraph of the news release. Are they presenting it to keep your attention? Then you want to look at the data. Then you want to look at the comments by the management. And if you look at the comments by the management, one of the things that I'm always trying to differentiate between management groups is, are they the kind that there's two kinds of management. There's those that want to find a mine, and there's those that want to mine the public. And you can learn a lot about what kind of management you're looking at by what they say in that quotation. If it's a lot of hype about, our valuation compared to this valuation, blah, blah, blah. Or if it's a lot of information about, what their goal is for the future and what these results mean to their future, you can sort of get a sense for, are they on the path to finding a mine, Are they on the path to mining the public?
Hmm.
And if you can do that, and you do that over and over and over again, you'll learn how to do that and differentiate. And the best way to do that is look at their websites, look at their corporate presentations, and look at their news releases. Whenever I do my homework on a company, that's always where it starts for me.
That was amazing. And just to share with you, when I started this podcast back in February, I was amazed at how much you could talk to a company. I thought they were just a ticker symbol, and then you have them on a podcast, or you call them up and you email on them. And now I have phone numbers of my investments I'm in. I'm like texting them like, hey, is everything all right over there? And it's crazy.
And you're learning one of the most important lessons that I think any investor should and could,
Mhm.
which is do your homework,
Yeah.
contact these guys. I've always found, no matter what subject I was in, that those that have good knowledge, they can break it down for anybody.
Mhm.
And they're usually also teachers. They want to teach you what they've learned. They want to pass it on to you. So take them up on the offer, phone
Yeah.
them, send them
Mhm.
an email. Look at what you're learning in a few short months.
Yeah.
It took me years to learn that, so
Yeah.
that good on you. And more people should do that.
Yeah. I can't thank you enough, Alan, for coming on. I wasn't sure what to expect from this program, or this conversation, but I'm sure happy you came on. I do like letting my guests close off though. So here's your opportunity to say whatever you'd like to my listeners out there, but please close us off.
Well, like I've gone over, doing your homework, using those basic tools of phoning somebody up, getting on their website, checking out their corporate presentations, reading their news releases, trying to differentiate between whether they're trying to mine your pocketbook or find a mine, will do you very well as a young investor in this space, or an older investor in this space.
Mhm.
I really emphasize a lot in my reports, do your homework. And if you do, you'll be better informed, and a better informed investor makes better investment decisions.